Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the major US stock indices as we always do in our this segment. This video is for educational purposes only and it is not a financial advice. So guys, we did a video yesterday and in that we had mentioned key patterns and levels that we were watching. So this video is going to be quite short. I would recommend at the end of this video, if you're interested in finding out more about those pattern formations in detail, then also watch that video. Okay, so here in the what we are looking at is the daily chart of S&P 500 E-mini futures, and what we had mentioned was to watch this level 40.65.75. This was the level to watch for today. Today we had Federal Reserve coming in with their FOMC meeting and the decision for the interest rate. What the Fed has done is they have hiked the interest rate by 25 basis point, which is at the smaller end because of the rhetoric and the data which had come in from January and also after their meeting. Um, uh, Perhaps a wider, maybe a 50 basis point was kind of expected. However, due to the um, events which took place with the bankruptcies of Silicon Valley Bank and Signature Bank, and even First Republic, the smaller bank, is kind of under duress. What I would recommend is to watch our video for which we had done for the banking stocks. We also cover the major banks. So one of the comments which the Chairman Powell mentioned in a question posed to him was whether the team had discussed in the meeting not to raise interest rates at all because of what's happening, and he acknowledged that. So that is and kind of an indication that perhaps the interest rates were raised because of the credibility issue, and what the Fed had been saying in its rhetoric to raise interest rates in its fight for inflation. However, it's also admitting, in my opinion, that there is stress in the financial system, in the banking sector in particular, and that could spark a perhaps a move into risk off side of things, which means that US dollar might strengthen from here as a safety play, safe haven play, and we could see stress come in the risky assets such as the stock market. But we look at the technicals. That's what we cover here. But I just wanted to bring to the attention some fundamental part because interest rates, they are driving everything. So we need to be careful of what the theme is with regards to inflation and the interest rates. So guys, what we are looking at is a daily chart for the S&P 500 E-mini futures. In the video we did yesterday, 40.65.75 was our level to watch, and what we had said was if the market closes above this level, then that's going to be bullish. However, what the market did is it went right up to this level, a little bit above to about 40 to be exact, 40.73 and 3/4, and after that we have had a big sell-off, and it's taken yesterday's, which is 21st of March, low out, and it's a fairly ugly looking black candle, meaning it's a bearish candle. And here what we could be looking at is perhaps a move continuation lower, but we have to keep on watching this level of 40.65 being a really key level. Let's take a look at the Russell. So this is Russell 2000. This is the small caps. We have been watching for this 38.2% Fibonacci retracement, and this some resistance coming from the shaded box. The price is unable to take that out. What we were kind of drawing as a level was this 1852. If the price begins to close above that, then that's going to be constructive for the upside. Hasn't had happened yet, and on the downside, this support level coming from 78.6% Fibonacci retracement. If this gives way, we are looking at a retest of the October lows in this index. Now let's take a look at the NQ. This has been the most strong of the indices in the 2022 sell-off. Tech got wrecked. It was the weakest, but in this rally since the October 2022, this has done pretty well compared to some of the other indices. And here, what this index has done is it went right up to the 78.6% Fibonacci retracement of this swing high coming in from the 16th of August 2022, and it closed lower. And we had some resistance level coming in, highlighted by these brown lines. Ultimately, we were thinking that perhaps it could go up to our level of 13,275, but if the price is going to encounter strong resistance from the 78.6% Fibonacci retracement, then perhaps that number might not be reachable. But we'll keep on watching for support levels to come in, and we'll update you guys as we watch the price action. Then we take a look at the Dow Jones futures. So this is the E-mini Dow Jones futures. Guys, this one seems to be the weakest of the major indices. And again, it found resistance from the 38.2% Fibonacci retracement, and it has kind of moved back into the range. And where this a lot of this consolidation took place. So unless it begins to close above this high of 32,994, the chance for this to move back into this consolidation, perhaps the lower end of it, or even reach down to 61.8% Fibonacci retracement right at the 31,135 cannot be ruled out at this stage. So this is what we're looking at in the major indices for now. If you guys like our analysis and how we look at the markets with pattern recognition, Fibonacci retracements, then please do subscribe to the channel. And if you like the video, then please do subscribe and hit that like button. That just tells me that people find the videos good from an educational perspective and just encourages me to bring more videos out for educational side of things. So thank you very much guys for watching the video. Good luck and good trading.